The Union Budget 2025, presented earlier this year, laid out a financial roadmap for India at a crucial economic juncture. A significant focus was on tax reforms aimed at simplifying structures and benefiting the middle class. The budget seeks to balance fiscal prudence with economic stimulation across sectors. A central theme is a drive towards a transparent, taxpayer-friendly regime. The finance minister emphasized reducing the compliance burden with key proposals. These reforms aim to boost disposable income, fueling consumption and grassroots economic growth. For the middle class, these announcements were eagerly awaited, promising relief from complex tax procedures. The budget introduces changes directly benefiting middle-income earners, impacting household budgets positively. Beyond individuals, the tax reforms have broader implications for the economy. The strategy is to create a conducive environment for investment by simplifying tax laws and offering incentives. This approach is expected to attract fresh capital and encourage business expansion. Ultimately, these measures aim to ensure robust economic development and create employment opportunities. The government's commitment to a more equitable tax system is evident. By fostering a cycle of development, the budget sets India on a path of sustained growth. The tax proposals are part of a larger plan to enhance prosperity for citizens. The focus on transparency and ease of doing business is anticipated to attract investment. The budget's tax agenda is a strategic effort to stimulate economic activity. These measures are expected to have a direct impact on the financial well-being of households. The government's vision emphasizes sustainable growth and prosperity. The Union Budget 2025 aims to create a more taxpayer-friendly environment. A key announcement in the Union Budget 2025 is the increase in the income tax exemption threshold for the new tax regime. Individuals earning up to 12 lakh rupees annually are now exempt from income tax. This move provides relief to a large segment of taxpayers, especially those at the lower end of the middle income spectrum. The enhanced exemption limit effectively increases disposable income for millions. More money post-taxes can lead to increased consumer demand, a critical driver for economic activity. The decision also makes the new tax regime more attractive, encouraging more taxpayers to switch. This shift aligns with the government's goal of a simpler tax structure with minimal complexities. Taxpayers must evaluate their financial situation to choose between the old and new regimes. Financial advisors suggest the new regime's enhanced exemption is advantageous for many, especially younger professionals. The change marks a significant step in personal taxation policy. The government's intention is to provide considerable relief to taxpayers. The new exemption limit is a direct fiscal stimulus. It simplifies the tax system and encourages compliance. The measure is expected to benefit various sectors of the economy. The government's broader goal is to make compliance easier for everyone involved. The 12 lakh rupees limit is applicable under the new tax regime. This change is a significant step in personal taxation policy. The Union Budget 2025 introduced an enhanced standard deduction for salaried individuals and pensioners under the new tax regime. The deduction is now 75,000 rupees per annum. This simplifies the process as taxpayers don't need to provide proof of specific expenses. Combined with the new income tax exemption limit, it raises the tax-free income ceiling. The government's rationale is to acknowledge unvouchered expenses and provide a straightforward tax benefit. This simplicity encourages compliance and makes the new tax regime more appealing. The enhancement is designed to put more money into the pockets of the middle class. Increased take-home pay can lead to higher savings or increased consumption, both beneficial for the economy. Experts believe this move will help employees manage rising living costs. The enhanced standard deduction supports salaried taxpayers and invigorates economic activity. The government's aim is to provide relief without adding complexity to the tax filing process. The measure is a key component of the budget strategy. It is a targeted measure to support the middle class. The deduction is a welcome development for the salaried class. The Union Budget 2025 introduced a significant restructuring of income tax slabs under the new tax regime. The revisions aim to create a more progressive and simplified tax structure. The goal is to reduce the tax burden for middle-income individuals. The new slabs ensure a gradual increase in tax rates as income rises. This approach makes the tax system fairer and less burdensome. The revised slabs provide tangible benefits to a wide range of taxpayers. By widening lower tax brackets, the government ensures a smoother transition between rates. Middle to upper middle income groups are likely to see a reduction in tax outgo. The simplification aspect is crucial for easier tax calculations. The move, combined with higher exemption limits, makes the new tax regime compelling. The changes are expected to have a direct impact on taxpayers' net income. The government's aim is to make the tax system more equitable. The revised slabs are part of a larger effort to stimulate economic activity. The new structure is designed to benefit a majority of taxpayers. The Union Budget 2025 introduced a reform for capital gains taxation, allowing a one-time set-off of long-term capital losses against short-term gains. This provision applies to losses incurred up to March 31, 2026. It offers temporary relief to investors, acknowledging the dynamic nature of financial markets. Previously, long-term losses could only offset long-term gains. The new flexibility provides an avenue to reduce overall tax liability on investment profits. This change offers a mechanism to manage tax implications better, especially in volatile times. The one-time provision suggests targeted relief for specific economic conditions. By allowing cross-category set-off, the government provides financial cushioning. It could encourage investors to re-enter the market or diversify investments. This may lead to increased trading activity and better market efficiency. Experts welcome this investor-friendly move as a pragmatic step. The ability to offset losses can make a material difference to net returns. The provision is particularly beneficial for retail investors with mixed investments. It demonstrates the government's responsiveness to capital market needs. The reform is a supportive measure for the capital markets. It encourages more active participation from investors. A landmark announcement in the Union Budget 2025 is the proposal for a new income tax bill, replacing the 1961 Act. The new bill aims to overhaul and modernize the direct tax framework. The objectives are simplification and rationalization of tax laws. The government envisions a tax code that is easier to understand and comply with. This involves removing archaic provisions and using clearer language. Another goal is to reduce the compliance burden on taxpayers. Streamlined procedures for filing returns and assessments are expected. The focus might shift towards monetary penalties for minor offenses. This progressive step aims to foster trust between the tax department and taxpayers. The bill promises a more predictable and stable tax environment. It aids in better financial planning and investment decisions. A simpler tax system can lead to improved tax collection. The bill is expected to be drafted after extensive consultations. This reform is a long-term change aimed at making India's tax system competitive. The proposed bill is anticipated to bring several benefits. It seeks to reduce tax-related litigation and improve efficiency. Tax experts and economists have reacted positively to the tax reforms in the Union Budget 2025. The measures are seen as steps towards a more taxpayer-friendly environment. The increase in the income tax exemption threshold and enhanced standard deduction are praised. These changes increase disposable income for the middle class, boosting consumption-driven growth. The simplification of income tax slabs reduces confusion and eases compliance. The proposed income tax bill is viewed as potentially transformative. Decriminalization of minor tax offenses is lauded for reducing taxpayer harassment. The reforms aim to stimulate growth by boosting aggregate demand. The one-time provision for capital losses supports capital markets. The reforms align with making India attractive for investment. Expected outcomes include a rise in consumer spending and sectoral growth. Simplified tax laws encourage participation in the formal economy. Fair and easy tax systems lead to greater compliance. Experts suggest a positive outlook for a robust, transparent economy. The measures contribute to sustainable development and economic dynamism.